All right. So here we're going to start from March 8th. These are the trade alerts. These are sent to my students. You can take the 7-day trial of the trade alerts. It only costs $19. You can enroll at beststockstrategy.com/memberships. That's beststockstrategy.com/memberships. Let's get started. So March 8th, S&P is about even. Volatility is up around 6%. Amazon's up, Tesla's down. So here I give my thoughts. It looks like we're going through a relatively volatile market. So I make a closing trade on Facebook, sold it for $1, bought it back for 60 cents. Decent profit, but given how volatile the market's been, it's good to take profits. Then volatility was down about an hour after the market opened. It's a good sign. I rolled Tesla to June. So I picked up an incremental $240. I reduced the risk by rolling it down by $15. Once Tesla stabilizes, I'll be able to roll it back in and reduce the duration. So here I roll Tesla from June to July, and then I reduced the strike by $20, and I financed it by selling a March 12th 430 put, and I collected 51 cents. Ideally speaking, I would definitely want to reduce the strike price by more than $20 in order to roll it out by a month. But I figured that in this situation, picking up the incremental $20 as safety net was more important, even if it cost me an additional month of having to hold on to the position. And plus, I figured that once Tesla stabilizes, I can easily roll that position back in from July to June to May, etc. So it's not really a big deal, even though it's probably not a great trade. The S&P fell $20, VIX up 5%, VVIX is down. Tech down again, Tesla was down 6%. Significant intraday volatility with Amazon up around $60, only to close down 50. The best course of action is to be patient and do nothing. So here, during very volatile periods, you want to wait until later in the day to make sure that there's not going to be a sell-off. So here you can see that the market opened up very strong, over $4,000 per contract, almost a 100% safety net between the current market price and the strike price. But look how much buying power they want. So it would have used up almost $100,000 of buying power. I mean, that's crazy. $92,000 for one contract. That's 10 times more than it should be. I've seen brokerages increase buying power requirements during crashes on leverage ETFs, especially the volatility ETFs, but I don't think I've ever seen an increase by this magnitude. Maybe in February 2018 with SPXY, I remember that the volatility increase essentially broke the product. In any case, the takeaway learning lesson here is the real enemy is volatility, not necessarily your strike price. Our Tesla positions can be $100 out of the money, but it'll show us an unrealized loss because people are scared. That's why you always need to leave substantial buying power so that you maintain flexibility. Facebook closing trade, bought it back for 64 cents and sold it for $1.30, so about a 50% profit. So once I get confirmation of the stabilization, then we'll roll in the Tesla puts. New opening trade on PayPal, B+ grade. And I figured that in the worst case scenario, I can always roll it down below 170. This was the best day of the year. S&P was up 54, but around 24 points off its daily low. Amazon and Tesla were both up $110. That's a lot. Volatility was down. So I wanted to see how it digests the gains tomorrow. Good opening. Let's be patient. Bend but don't break. Seems like all is well. Okay. So then we open up a new trade on Apple. I usually don't trade Apple that often, primarily because there's just simply Not a lot of premium available. So even on that, B plus grade, but I only picked up $56. I mean, it's pretty much nothing. I rolled Tesla. So I rolled it in from the April 16th to the April 1st. I kept the same strike, and then I financed it to roll it in by 2 weeks by selling the March 19th 455 put, and I got a small credit of 7 cents. Yeah, that's what I said here. Reduce the expiration by 2 weeks and finance it by selling a 455 put that expires next week. So the S&P was up 23. VIX was down again, close to 6%. And then Amazon and Tesla are both down around 5, which is great considering that previously they were up around $110. Good day for us, March 11th. So S&P is up 27. So this would be the third straight day of gains if the market's able to hold it. Once the VIX falls below 20, we'll start selling spreads again. It's been a great week. Closing trade, fill for 5 cents. Original is here. Okay, so this was the roll that we did previously, just a few days ago, when I used the credit from the 430 to help finance the roll and provide additional safety net by reducing the strike by $20. We'll continue to be aggressively manage the positions and reduce the expirations on the long-dated options. We'll do this in a disciplined manner. So here I rolled Tesla. I brought it in. I bought back the May, sold the April, and then financed it by selling a March 12th 875 call option, and I got a total credit of a cent. So moved it in by about a month, and I increased the strike price by $60, and I also sold a call option. So here's the original, picked up close to $800 on that. And then I just wanted to get rid of it earlier, so I thought it was important to reduce the expiration by a month. Picked up almost $800 per contract. Closing trade on PayPal. The original was there, so sold for $1.20 less than 2 days ago, bought back for 55% profit. See, this is what happens when volatility contracts. You can literally get like 50 to 60% gains in your positions in like 2 days. Shopify, new opening trade. $400. Then I give the spread option. So third day in a row that the market is up. S&P up 40. VIX down again for the third straight day. So that's 3 straight days. New opening trade, low B plus. S&P is down around 20. New opening trade for Facebook. Rolled 3 to 2 while also bringing in the expiration by 2 weeks. So pretty much here, what I did was I closed out 3 and then I sold 2 and I brought in the expiration by 2 weeks, and then I financed it by increasing the strike price by around $100. So the prior strike was $400 and on the 2 contracts that I bought back, and then there was one solitary contract which had a strike of $420, and I was able to collect a credit of 15 cents while also reducing the expiration from April 16th to April 1st. And the reason I was able to reduce the number of contracts and also reduce the expiration was because I significantly increased the strike price from 400 to 510. So that's a pretty big increase. The 510 strike is higher than I like, but I got to reduce it from 3 to 2 while also reducing the expiration. I may reduce the strike below 510 in the future. S&P up 4. So it looks like that the S&P was up 4 out of 5 days this week. Amazon down 24, Tesla down 6. The week started out poorly, but ended extremely well. Also, we'll likely start trading spreads to protect against volatility expansion. 2 opening trades. March 15th, new opening trade on Amazon. Picked up around $1,900. It's a pretty good trade. It's a lot of premium. Probably should have traded that larger. Tesla, I decreased the expiration from April 23rd to April 9th. So I decreased the expiration by 2 weeks and I increased the strike price by $20. And in order to finance that, I sold a near dated put option on Tesla with a strike of 480 and I picked up 73 cents or $73 of incremental premium. Rolled Tesla to a closer expiration, picked up a credit, reduced the strike by 2 weeks on the April 23rd strike. The market's down 2, VIX is up 4%. I like to see the VIX decrease a bit. Let's see how things are trading later on in the day. So here's a new opening trade for PayPal, B plus grade. Picked up around $278. Good day for us. We got some great trades early in today. Especially the Amazon trade. That's really good. Really good. VIX down 3.5%. VVIX down 1. I'm relatively confident that this is the first closing print of VIX under 20 in over a year. Regarding Tesla, usually after a large cap stock is oversold, there is at least 30 days of calm. So I'm trying to shorten the durations on as many of the Tesla contracts as possible. But at the same time, I don't want to expand my position or risk, so I'm doing it in a disciplined way. Once all the expirations from early May are closed out, I'll then attack the few remaining from May and July. Very good day for us. All right, March 16th, closing trade. Close. So there's the opening trade, sold for 81 cents. Bought it back 4 days later for around a 60% profit. Apple closed 2 positions in Apple. Here are the originals, 56 and 60 cents is what I sold it for. Original. So I closed out 2 Apple positions for a profit, closed for around 50% gains. I have a lot of positions open. I don't like that because it's hard to manage it and it gets overwhelming. So even though I have a lot of available buying power, I prefer to not have so many individual positions open because it becomes more difficult to focus and concentrate. That's why I close out the trades to reduce my number of open positions. If you prefer to leave them open, then you're welcome to do so. VIX is under 20. As I mentioned yesterday, it's the first time in over a year that it's under 20. I'm tempted to roll in one of the May contracts for Tesla, but I'll wait because I want some of the near-dated positions to expire or be closed out before addressing the May expirations. So Amazon picked up $207 for rolling an existing position. Rolled an existing position and picked up an incremental $200. Not a considerable amount of movement. Amazon up, Tesla down. Volatility indicators are mixed. Made a bunch of adjustments earlier today after opening some new trades yesterday morning. It's weird how my keyboard doesn't automatically fix the typos. Like, look at the adjustments. Adjustments. I would think that that'd be cleaned up, but in any case, the Amazon spread trade from yesterday is already showing a $700 profit. I'll continue to monitor for good opportunities. That's a high B plus grade, but I didn't want to make it probably because I already have a large position on Tesla. Yeah, I'm not making because I want my existing trades to expire. Yeah, I mean, that's a good trade, but if you don't have a large position, the best available opening trade that I would make if my Tesla position wasn't already full. S&P down 6, VIX about even, but VVIX 3%. Google and Facebook up, Tesla down 4%, decent day for us. S&P is down. PayPal and Tesla are the best opportunities. It's a lot of premium for a 190 put on PayPal. Yeah, so I made the trade later on, but I collected 20 cents less a premium than I should have. The market shows signs of strength over the past 20 minutes. I didn't want to Missed the trade, low B plus grade. Previously it was a solid B plus. New opening trade, B plus grade in Apple. Turnaround day for Tesla. Okay. March 18th. S&P down 20. VIX up 5%. VVIX up slightly. Rolled up an existing Amazon position. Picked up an incremental $375. Rolled it in by a week. So here what I did for Amazon was I bought back the 2400, then I sold the 2530, and I guess it was in equilibrium with the increase in the strike price relative to the expiration, and it sold it. It filled at zero. I don't think I've ever had something fill at zero before. That's interesting. So adjusted one of the Tesla positions, picked up a credit for 23 cents where I rolled in the May to April, and then I financed it by selling the April 9th 520 put, and I picked up $23. VIX up 10%. We made some decent adjustments today. Was a bit early, but nothing major. We were wise not to open any new positions this morning. It seems okay to me though. VIX up 10%, VVIX up 6.5%. I think it's important to watch as the market closes. If S&P closes weak, down 65 with the VIX up 15%, then it's a major cause. At the moment, it's just a typical down day. S&P down 58, VIX up 11, VVIX up 7, Amazon down 108, Tesla down 7%. I don't really see this pullback leading to much. My gut feeling is that it's just a typical sell-off, but let's be conservative and watch it. We made a few adjustments earlier today. They were decent, but I'm very curious to see how the market behaves tomorrow. Market's about even. Best action is no action. All right, so no trades that day. The S&P was pretty much unchanged. S&P was down 3, but volatility is also down 3.5%. Amazon was up, Tesla up slightly. All right, March 22nd, good stable opening. Tesla was up 5%. So then we wanted to wait until later in the day. Bought back PayPal. Picked up around 60% profit. Bought back Apple. This happens quite a lot, so ignore the date to the left. That's when I submitted it. If a trade fails and then I submit a buy to close order, the date on when it filled will actually be when I entered the buy to close order and not on when it actually filled. So you see here that it shows 3/9, which is when I entered it, but it actually filled on March 22nd. E-Trade should probably fix that, but whatever. So collected around 60% of the premium and closed it out early. All right, the VIX is the lowest it's been in over a year. So that's a decent trade. But it's a pass because of the buying power usage. Close out some PayPal, close out shop, let some Tesla contracts expire. I want to take advantage of the volatility contraction to consolidate my positions and take winners. That way I'll have significant buying power and a clean slate to plunge into the next great opportunity without nibbling. All right, March 23rd, VIX is up 3%. Closing trade, held for about a week, slightly more. So here, this is the trade that picked up about $1,900. And then we close it out for about 555. So yeah, so I sold it for 1900 and bought it back for 550. Nice profit, low stress, it's pretty good. New opening trade, B plus grade. So here's a trade that brings in over $1,000. S&P down 28, VIX up 10%. Even so, good day for us. I'm looking at Tesla and MasterCard, but I think I can get a better entry by waiting. Closing trade, the original was here. Held for less than a week and picked up 40%. I thought it was going to close earlier today because I set the open limit over 25 cents. It fell to 25.5. and I just got tired of looking at it and decided to close it out for a small winner. No stress, tiny trade. S&P down 30, VIX up 8.5%, VVIX up 3%. All right, Shopify, closing trade, closed for a nice profit. So sold it for $400, bought it back for $1.40. Managed rolled the Tesla position. So you can see that I decreased the expiration from May to April. And then I financed it by selling in April 550, and I picked up a credit. So close out the Tesla trade that expires this Friday. Closed it for 9 cents. Closing trade on Tesla, 43 cents. So I sold it for $580 and I bought it back for $43. So here's the roll of the original. So basically I sold it for $587 and bought it back for 43. So it looks like so this is the roll of the original. So here it looks like so April 16th, 440, and then I bought back. Okay, so here's the original. The very original was the April 16th, 440. Then I rolled the original, the April 16th, 440 to April 1st, 440, and then I financed it by selling the March 19th, and then I picked up seven extra dollars for that, and then I closed that out. So the total credit received was $587 because you have the $580 from the original plus $7 on the roll, and then I bought it back for 43 cents. So yeah, so this is correct. New opening trade, B plus grade. New opening trade, B plus grade. For Fiverr. New opening trade, B plus grade. Yeah, here I actually made a mistake. I said that those two Fiverr trades are separate. But yeah, I mean, obviously they would close themselves out. So yeah, it'll close it out automatically. I did in my account. Let me send in updated trades. So on a net basis, you'll be short the 160. So here's the Fiverr trade. Okay, so I sold one more and bought two of the 140. So it's now two short spreads. So pretty much you'll be short two of the 160 by 140s. Best opportunities are with Amazon, Tesla, Apple, and PayPal. Will be patient and wait for the best entries. S&P down 21. VIX up 4%. VVIX down 1%. Tomorrow will be very conservative. S&P is down 15. New opening trade B plus picked up $526. S&P up 20. S&P up 16 the following day. High B plus grade. Shop is oversold. Picked up $324 because I sold two contracts. B plus grade for Amazon. So I was early on Shop. Amazon's down 40. Tesla's down close to 35. Okay, very strange day. S&P up 65. Amazon closed up after almost falling below 3,000. Market was extremely strong during the last hour of trading. All right, the market is down slightly, but volatility is up. In any case, I don't like how volatility is spiking, so let's wait until later today to see how the market is trading. New opening trade, low B plus grade. High B plus trade for Tesla. The Amazon trade is already showing a 20% gain, S&P down 3, but the VIX was up 10% and VVIX up around 3%. Amazon up 24, Tesla down 7, 30th. S&P down 15. New opening trade, B plus grade. New opening trade, B plus grade. And not much activity on March 30th. S&P down 12. VIX down 5.5%. March 31st, Tesla's recovering. All right, open up a new position in Amazon. So it looks like I sold a put spread and a call, which is pretty rare because usually I don't do that. But what must have happened was I thought that Amazon was probably going up too quickly while also thinking that Amazon is underpriced. So I sold a call and a put spread, and the call didn't use up any additional buying power because I had a put position. Okay, so sold a call to offset a lot of the puts, then also opened a new spread, picked up around $550 B plus grade. S&P up 14, but it was weak heading into the close. VIX volatility down 1.5%. Excellent day for us. Tesla up 5%. All of our positions were profitable. Okay, April 1st. Futures market is up. So close out Shopify, close out PayPal. Close for nice profits. Here are the originals. Okay, original Shopify. All trades closed for more than 50% profit. None of them were challenged. Started rolling in the July Tesla trades. So I reduced the expiration by 30 days. And I financed it by selling the April 30th 510 put. Picked up 28 cents. So roll from July to June, reduce duration by 1 month, finance it by increasing the strike by $10, and also selling the April 30th 510. Picked up a small credit. Consolidated the Tesla positions to expire on the 23rd with a 550 strike. Picked up a $44 credit. I would close out the 107-100, but I don't want to because some people will get upset since I submitted it 12 minutes prior to, or I submitted it 2 minutes before closing. But if I was trading on my own, I'd probably close it out now and said it'll likely trigger on Monday. Remember that tomorrow the market is closed, holiday. So the S&P up 47, volatility down about 10.5%. So I probably meant there VIX is down 10.5%, VVIX down 3%. That's probably a typo. Amazon up 67, Tesla down 6 after being up 25 earlier. Very good week for us. We are well situated and well positioned to profit in the current market. All right, so this is also like a 30-minute video. So I'm going to end it at April 5th, and then I'll do the remaining from April 5th up to the present day sometime over the next few days.